right, welcome everybody for our third video in the Southwest Open Enrollment series. Today we're going to talk about the regular plan versus the health savings plan. So Charlie, do you want to give an overview of the regular plan?
Yeah, absolutely. So the regular plan at Southwest Airlines is what we've called before a grandfather plan. And I think that means during Obama's administration, they had the ACA, or better known as Obamacare, rules and regulations came out, changed some of the standards on healthcare, but this one was grandfathered in. So it just looks a little different than the other three. So regular plan, Southwest Airlines, very popular. And not mainly, but one of the reasons is because there's no premium. It's free. So that's very attractive, as you can imagine, John.
Oh yeah. What about the health savings plan? That's the other big one we really like.
Yeah. So the health savings plan is part of what's called at Southwest the Benefits Plus. I think they get that name right. The Benefits Plus program, where there's actually three on the Benefits Plus side. The health savings plan, Choice C plan, and the Choice Plus plan. So those are all three of the healthcare benefits on the Benefits Plus side. So you think of that one group there, and then you have the regular plan in its own little group. Like you said, we do kind of like the health savings plan for certain circumstances. And I've used the health savings plan a lot in my time, at Southwest and now even after Southwest. So there's a lot to it, but we'll talk about those two today. And what we won't talk about today because of time and things are the Choice Plus and Choice C. Those tend to be kind of another discussion. So we'll just compare today the health savings plan and the regular plan.
Hey everyone, I just wanted to go over a quick few changes that came out after we recorded the original video. So UMR is the new medical administrator replacing Cigna. And then there's new contribution increases and costs. So here's the health savings plan update, 27, 49, 39, 63. Another thing to note is the regular plan. They have a new narrow network of pharmacies, so you may have to do a new pharmacy because out of network are not covered. And then the HSA limits also went up, 4,400 for individuals and 8,750 for family in 2026. Awesome. Thanks, Charlie. So who would benefit from going on the health savings plan? Why are we big fans of that?
Yeah, absolutely. Well, I'll use my own situation as an example. And fortunately, John, we've been blessed with pretty good health with our family and kids over the years where there were no ongoing, health needs, if you will. And what I mean by that is medications. Sometimes kids need medications or parents need medications ongoing. Sometimes there's ongoing medical needs like diabetes or things like that might impact a family. We've been lucky and we've not had those things. So in general, our health picture looks like this. Somebody gets a flu, we go to the clinic. Somebody twists an ankle, we go to the clinic. Or actually, John, I had a major medical surgery when I first got on it, but nonetheless, that was 1 year of max out of pocket, essentially, and that did happen to me. But in general, you're relatively healthy. You've got a little margin in your cash flow. If cash flow is a problem and there's some debt, things like that, I would not go to the health savings plan. Because you're going to either pay some out-of-pocket things or you're going to go to your health savings account. So in general, in my opinion, John, that's kind of who might work well, where most of your medical needs are preventative and you've got some wiggle room in the budget cash flow there.
Yeah, and just a little bit more about the health savings account. You can contribute up to 4,300 as an individual in 2025 or 8,550 for as a family. And then if you're age 55 or older, you even get another 1,000 that you can contribute on top of that as catch up. And any money that goes in, it goes in tax-free, it grows tax-free, and it can be withdrawn tax-free if you use it for a medical expense. And that's like one of the only accounts there that has that triple tax savings. And that's why we like the HSA a lot. Of course, though, you do have a higher deductible and higher max out of pocket. So that's the risk you take with that. But I mean, $8,500, if you're in a 24% tax bracket.
I'll do the math for you real
That's
quick, John.
yeah.
That's about $2,000.
That's pretty nice. So that's one of the reasons why we like the HSA and the health savings plan. What about the regular plan? I mean, we know it's free. Everybody raves about the regular plan,
Mm,
and it is a great plan.
sure.
But who would be a prime candidate for that?
Yeah. Well, let me back up a second, John, on the health savings. I can't resist talking about the health savings plan a little bit more to add some color to what you said as well. In that if you contribute 8,550 annually to the health savings account, i.e. you're married and you're under age 55, that's what you can contribute. That could save you, like you said, $2,000 in taxes. And the deduction is 8,550. The savings itself is 2,000 or more if you're in the 24% marginal tax bracket or higher. So right off the bat, your $2,000, your tax bill is $2,000 lower. So that's pretty significant. And on the other hand, as wonderful as that benefit is, and as excited as we get about that, we cannot let the tax tail wag the dog here. It's got to be health needs first. Then, does the health circumstances, do they match? And if so, then the health savings account can be great. And I like the health savings account, not just because of the tax deduction, but because after all these years of saving in it, I have a really healthy balance. And that makes me happy because if something happens now, medical or even in retirement, I have a pretty healthy balance of funds in my health savings account that I can use in healthcare emergencies. So I like that idea. And I feel like I miss out on that on the regular plan I have. Obviously it is free, like you said, but I miss out on that savings component that I really like. Not just the tax component, but the savings component is really nice. So your question then, John, was who might benefit from the regular plan? Is that right?
Yep.
All right. So the regular plan is good for people. I think it's great for military people, John, that have TRICARE. We see that a lot where our military folks use TRICARE and the regular plan together. They match up and pair together really well. And so that could be an example. I think the other example is the opposite of what we talked about, the health savings plan. There's some ongoing health needs. There's some medications that happen regularly and often. And we talked to one family the other day and they were like, oh yeah, we meet our max out of pocket on the regular plan every year by March. And I'm like, oh, you should stay with the regular plan then, because you have some ongoing health needs and that seems to be a plan that works well for you. So I think those are some things. Again, if most of your medical needs are simply preventative, like sports checkups for the kids that you got to have every year to do sports, or back to school physicals, or mammograms, or whatever else there is out there, then you're going to pay for those on the regular plan, whereas those are free on any other of the health plans. So I think those are the last thing I'll throw in there is what you mentioned before while we were preparing is like, if I'm on the regular plan, I need to use caution that this has gotten better since the contract, the latest contract at Southwest, but I'm limited in life insurance if I'm on the regular plan. Luckily, that limit has gone way up with the new contract, and I can do 800,000, or I'll get 800,000 by default as a Southwest pilot. I get that on the regular plan. I could even sign up for another 150 if I want to, but 950 is the maximum. So if you need more than 950, then you need to go outside of Southwest to get it. The last thing I'll say, John, is that if I'm on the health savings plan or one of the other benefits plus plans, Choice C or Choice Plus, and let's pretend that I have lots of life insurance, 5 to 10 times salary, $2 to $3 million in life insurance. Well, remember, if you switch to the regular plan, you're going to lose that life insurance. You're going to go back down to the 800 minimum. So just be cautious before you make that move and evaluate your life insurance before you do that.
Yeah, that's a great point, Charlie.
Mm-hmm.
I hope this video has been helpful for y'all. If it has, please share it and help out some other Southwest pilots. If you have any questions, please reach out to either me or Charlie at leadingedgeplanning.com. And you can email me at jonathan@leadingedgeplanning.com or charlie@leadingedgeplanning.com.
All right. Thank you, John.
See you.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.